Hello there, I'm Shyamla. In the third part of Lecture Series 2, I'll look at the objective of financial reporting, Chapter 1 of the Conceptual Framework. The Conceptual Framework sets out the objective of financial reporting is to provide current and potential investors, lenders and other creditors information to enable them to make decisions on providing economic resources. It is important to take note of the following. Firstly, the conceptual framework sets out the objective of general-purpose financial reporting. As such, the financial statements may not provide all the information necessary to make economic resource decisions, and therefore users will need to review pertinent information from other sources too. Secondly, it is possible that other user groups, such as market regulators, may find general-purpose financial reports useful, but the framework does not consider them primary users, focusing on current and potential investors, lenders, and other creditors as the primary user groups. Thirdly, the purpose of providing information on economic resources enables the primary users to assess the entity's potential future net cash inflow and the effectiveness and efficiency of management in discharging their responsibilities, management stewardship. So, what information should be included in general-purpose financial reports? Primary users will require information on economic resources, assets. Next, on economic claims. If these claims are attributable to third parties, it should be presented in the statement of financial position as liabilities. However, if the claims are related to the residual interest in an entity's net assets, it should be presented in the statement of financial position as equity. Users also require information on changes in economic resources and claims. If these relate to financial performance, it should be recognized as either income or expenses in the statement of profit or loss. Financial information on other changes, such as contribution from or distribution to equity holders, are presented in the statement of changes in equity. A review of information on economic resources and claims would enable user groups to make economic decisions, as they would be able to assess the financial strengths and weaknesses, as well as the liquidity and solvency of an entity. Additionally, users would be able to assess an entity's need and ability to obtain financing. Finally, information on economic claims and payments also enable users to predict how future cash flows would be distributed. In Part 4 of Lecture Series 2, I will look at qualitative characteristics of useful financial information, Chapter 2 of the Conceptual Framework of Financial Reporting. Till then, thank you and have a nice day.